But the one space which has been extremely buoyant has been the metals pack. So let's talk about what exactly is happening and whether the prices are going to continue to spiral up or at least hold at these levels. We have with us TK Chand, the former CMD at Nalco, joining in on the show, and we also have Jonathan Barratt from Probis Securities on the show right now. Gentlemen, good to have you both on the show. Jonathan, if I could kickstart the discussion with you. As of last week, the LMEX index as well posted its best week in almost a decade, posting an uptick of about almost 8%. And in the last week alone, prices of aluminum have shot up about 7%, copper has surged about 10%, and zinc as well has been higher by 20%. What's leading to this fresh bout of uptick right now?
Look, it has been quite an aggressive move to the top side. There's no doubt about it. I think at the core of it, there's the supply issues. Now, whether the supply issues are being caused by lack of investment, whether they're caused by the energy crisis, I think it's all added to the weight for the markets to move up. If you think about it, aluminium in itself is a high user of electricity, and if they haven't got the energy to produce it, then that creates a supply crunch and prices go up. So we've seen that a lot in a lot of the metal complex at the moment, where we actually see the, for instance, on the copper, the cash to 3-month copper price on the LME is at a record level of $1,000. That indicates that there is no supply of the metal on the cash markets. We have to wait for 3 months until. Now that's been echoed throughout the whole complex, and that could cause that supply crunch, given that we keep this energy crisis going and those prices can continue to trade high.
Mr. Chand, clearly the near-term trigger seems to be the coal shortage as well as the raw material cost pressures, which are leading to this, sudden spurt in the metal prices. But where, according to you, are prices headed from here on? And would you say that this is more a structural move that you're seeing across base metals, or is it more a temporary aberration and spurt up that one is seeing?
Right now, the prices are quite at a high level. It is 3,200 LME. And these prices have mostly been moved because of the supply disruption in China, and also the rebalancing of the pent-up demand, which was there in ex-China in major economies. So these factors have all combined, but mainly it has been driven by Chinese supply, because China has cut down production by 2.9 million ton, which itself has created short supply in the market. And there is also demand there in China. The demands have not moderated till now, though they have imposed cut across the industry. So Chinese factor combined with ex-China demand rise, that have led to this spot in the market. And I don't think that this price level will be holding up for a long time, because beyond $2,700 LME, the prices are unsustainable. In fact, it is not good for the industry also, because industry should look at more broadening the base of use rather than the price rise. So I think this price may be keeping in view that there is a overall increase of prices of all metal and the commodities. So the cost push factor is holding the price level, and maybe 1 or 2 quarters this should be holding, and there could be an uptick in the price of maybe $100 to $120. It could be increased, but after that, definitely the price inflection point will be there, and prices will start correcting for the same reason for which it has been moving up.
Jonathan, would you agree with what we've just heard Mr. Chand say, that it's only a matter of time before you start seeing some stability in the prices and heading down?
As commodity prices go up, as we know, as primary imports, that will already start to slow down some of the economies. Now, we've already noticed it in China, where GDP has reduced quite significantly, and that could be as a result of energy crisis, production, slowdown, Evergrande. It could be a whole array of issues. So we think, like generally with commodity prices, they have this surge, more supply does come onto the market, and then prices start to retract. The question we have to ask ourselves is, how long will the prices be at these levels? Given where the cash markets are at the moment and the 3-month market, you get a sense that whilst we have this energy crisis with us, the production of some of these metals, particularly aluminium, are going to be cut. So we're going to have a supply crunch, and that in itself will aid the price moving higher. It is a temporary thing, because as prices change and energy becomes more efficient and we get more supply, so will the production. So we combine that production, more production and a cooling of economies, then prices should come up. So it is temporary, but there could be still some more pain in the market to the top side if you're a buyer.
The question, of course, is how long you're defining temporary as. Will it be, for example, beyond the winter season in the West?
I think let's have a look. If China, the major consumer and producer, is slowing down, then maybe the economies will start. Remember, we've still got this massive infrastructure spend that a lot of the economies have employed due to the pandemic. That in itself is an issue there, because that's saying we have commitments for the supply of metals, which certainly aren't there. So I think as we lead into the Northern Hemisphere winter, normally we get a bit of a slowdown in this production and demand. So that might see prices level off. But as to whether or not it's a peak straight up and straight down, I don't think so at the moment, because we do have that massive infrastructure spend due to the pandemic, and that needs to be fed. And the only way you can feed that is to have more energy in the market to produce these metals at a cheaper rate.
Mr. Chand, if I can come to you, yesterday we saw the Nalco stock price really zoom up, as we did with Hindustan Copper, as we did with Hindustan Zinc. These are all disinvestment and privatization candidates. Your expertise as a former chairman of Nalco, do you see these going through with the kind of energy crisis that we're also seeing, the supply chain constraints we're seeing, and what would be the impact then?
Nalco's they are now trying to open Utkal D and Utkal E coal blocks. Once these coal blocks are opened, they will have the energy security also. And already Patangi bauxite mine is there, so they have the bauxite security. So combine these two things, I see a bright aspect of the prices for the share of the Nalco, because Nalco has a long-term stability. And in addition to that, government has also announced that they will be going for privatization or strategic sale or disinvestment, whatever it may be, the form it will be there. So therefore, all these things will combine, and definitely the market sentiment that will push the prices up. And moreover, right now, Nalco is having strong alumina. So alumina prices are also heading very high. In the last 1 month itself, alumina prices have gone up by $100. It is at the level of now 480 to 500. And with alumina prices up and aluminum prices also very high, and with security of bauxite and energy a fairly good amount, I think that Nalco is in a comfortable position to sell ahead. And as far as power is concerned, they have the FSA with Mahanadi coal. They are getting coal to a reasonable extent, and also they have an agreement with state power grid to draw power of 400 to 450 megawatt. So that will also help them. So from all point of view, Nalco is right now in a comfortable position to sell across.
Right. Okay, Mr. Chand, Jonathan, great to have you both on the show and give us all that perspective on what's really going on with base metals. They continue to spiral up as we speak.